Hi, I'm Danielle Hale, Chief Economist for Realtor.com. In this weekly video series, we'll cover concise updates on the real estate and economic information you need to know to navigate the housing market in these challenging times. We'll focus on the data primarily through the lens of what it means for you as a homeowner, home buyer, home seller, or real estate professional who supports folks on this journey. The three key takeaways for this week are: one, the size and speed of COVID-19 related economic disruption is really unprecedented, and we'll look at some housing and labor indicators that show that. Two, the size and scope of the stimulus response is also larger than ever before, and it's been enacted faster than ever before. When I say stimulus, I'm referring to both monetary stimulus from the Fed and also fiscal stimulus from Congress and the administration. We've in fact taken a detailed look at some small business lending programs, and you can find links to this and other resources in the comment section below. And then three, the size and scope of this disruption is unprecedented, so our models have never seen anything quite like this before. Will we have a quick bounce back to normal once the danger has passed? That remains to be seen. It's an open question that really hinges on having scientific and medical breakthroughs, things like testing, treatments, a vaccine, that will enable us to get back to a sense of normalcy. Now, looking at the labor market, let's talk about the data that we have there. So there's a monthly jobs report that was released April 3rd. It covered the week of March 12th. If you think back to March 12th, it seems like a long time ago. That was the week that the World Health Organization declared COVID-19 a pandemic. It was the week that President Trump made several evening addresses and declared a state of emergency. It was also the week that the NBA suspended indefinitely its regular season. So a lot was going on. But really, when you think about how the virus is impacting the United States, it was really just beginning. So that data already showed an increase in the unemployment rate from 3.5% to 4.4%. It was really just the tip of the iceberg. In the following 3 weeks, nearly 17 million people filed for unemployment insurance. That means they were either let go from a job, were furloughed, or had a reduction in their hours. Now, it's worth keeping in mind that gig workers, contract workers, and 1099 workers, and the self-employed who normally don't qualify for unemployment insurance benefits, are in fact eligible for benefits as a result of stimulus legislation. And many real estate agents are in that category, so it's worth looking into even if you would not normally qualify for unemployment insurance. With those subsequent changes in jobless claims, it's likely that the unemployment rate is already in the neighborhood of 15%. So we're talking a much higher and much faster rise than we've ever seen before in the data. Turning to the housing market, our March data showed a very different picture when we look at the whole month versus breaking it into half and looking at the first half versus the second half of the month. It definitely showed a softening in the housing market. And we see that with slower declines in total listings, a fairly dramatic drop off in the number of new listings. So sellers deciding to put their homes on the market was down by about a third across the month in the second half of the month. And then slower price growth. So prices had been growing at a faster than 4% pace earlier in the month, and that slowed to under 3% in the second half of the month. We expect more softness ahead as the virus disrupts confidence and disrupts people's ability to get out and shop for homes. But we'll follow that with the data. You can find detailed analysis of the COVID impact on the housing market, as well as our March housing trends report in the links below. As I mentioned, the situation is unfolding. We look forward to keeping you updated through this weekly video series. If you want more real-time information, you can follow us on Twitter. Our handle is @RDC_economics. Stay tuned and we'll provide you the updates with the data you need to know.